Hello and welcome to Trading 5 Talents. In today's video, I'm going to be covering all of the trades that I made in November. So I've had a couple of questions asked to me regarding how I choose my strike prices, when I enter, when I exit, and also just an overall view of the trades that I made in November. So that's what I'm going to do in this video. I'm not exactly sure the best way to show all the trades except for just using my trade log. So what I've done here in my trade log is I filtered only for November stocks, or November trades, I'm sorry, and then we'll go through each of these stocks. So in November, it was a stellar month for me, just over $5,600 in profit. So that was about 12%, just over 12% in ROI for the month. And so these are the trades that I did. I already did a few videos regarding some trades like Lucid, Mara, Riot, AMC. I'll cover some of those again here, and I also did another video just on managing my Mara trades, M-A-R-A, and that's also on the channel. So let's start by looking at AMC. I enlarged the trade log so you could see it a little bit better. I also hid a few columns that weren't as relevant for this video. Hopefully that will work. So let's start with AMC. So I've sorted these by the close date. You can see right here. All right, so cash secured put on AMC, $34 strike price. I sold two contracts, and I got this premium, and I closed it 97.9% of my maximum profit, so for a total of $280. Now, the reason I chose the $34 strike price is, again, I choose all of my cash secured put strike prices based on a 70% chance of probability, which is approximately a negative 0.3 delta. So I don't use technical analysis, no support, no resistance, no indicators of any kind. I simply choose based on probability. So that's how I chose a strike price. I like to sell my cash secured puts on red days, and I like to sell covered calls on green days if possible. So this must have been a neutral to red day for AMC, and at the time that I entered this trade, this strike price had a 70% chance of winning, and that's what I chose. All right, I had a covered call on AMC, another covered call on AMC, and looks like I had 4 of these covered calls on AMC, used these quantities of shares as the collateral, and you can see I exited here between 3 and 6 cents, which is about 90 to 95% of my max profit, and you can see all the gains that I got there. All right, cash secured put on AMC once again, exited at 93% profit, and then again another series of covered calls. So basically what I'm doing is once I close a cash secured put, or once I close a covered call, I'll just re-enter for the next week at a similar or slightly similar strike price. So that's why you can see cash secured put and a series of covered calls, cash secured put and a series of covered calls, and I'm exiting 90% ish. All right, and then I've got this one down here. And what I did, this one's a little bit different. So on November 26th, I bought the 37 call. And this was because I saw AMC dip down. I'm bullish on AMC. So what I did is I purchased just one call option. So I only held it for a day. This was just a day trade. It was just a quick scalp. Went from 375 all the way up to 440, and then I just gained an extra and a quick $65. So total for AMC, $18.46. All right, let's look at BlackBerry. All covered calls against stocks that I own, and then here are all of my closed positions, and then I'm exiting anywhere here 80% and above. Now, how I choose these strikes for my covered calls is basically I am choosing a strike that is at or above my cost basis. So my cost basis for for BlackBerry is going to be $11.50, and I actually have a $20 cost basis on one set or one lot of 100 shares. That's when I purchased it way back in January when it ran up. So I'm stuck in at $20 with 100 shares. So BlackBerry is just covered calls, and you can see I made a total of $202 for BlackBerry. All right, next up we have Fuel Cell. So here I was assigned a cash secured put. So I had to buy 100 shares of Fuel Cell at $8 a piece. And this row right here is when I sold a covered call against those $8 shares, and you could see I sold it for 39 cents. So I let it go until expiration, and I was actually assigned this. So the shares that I was assigned and I had to buy for $8, now the covered call was assigned, so those shares were called away at $8. So I did not make any profit on the sale of the shares, but I did make the premium for the assigned covered call. All right, then I bought 200 shares at $10.33, and then I sold a covered call for $10.50. And I got the premium, $50 total. That was also called away, and so I had to sell my shares at $10.50. I bought them at $10.33, so I had a profit of $34 there. So I sold 2 more covered calls at $14 against shares that I already own, and you can see that I exited 92% max profit, and you can see the total for fuel cell for the month was $201. So again, the covered call strike prices are determined by my cost basis. If you don't know what your cost basis is for your shares, I do have a free cost basis calculator that is down in the description. You can open and save that Google Sheet to your drive, and then you'll be able to figure out what your cost basis is and what you need to sell your covered calls at. All right, so that's AB. Now let's go to Lucid. All right, with Lucid, so this one is an interesting one here. You see I have 2 losses in red. I bought shares, $35.90. I bought 100 of them on the first. Sold an in-the-money covered call, $33, and I sold it for $529. But because Lucid kept increasing, I exited out of that position the same day, and I lost $26. I sold a higher strike call, $42, for $113 in premium. I closed it the same day for a quick $20 gain. Because Lucid kept increasing, by the end of the day, I just sold the shares outright for $37.16. So I gained $126 on the sale of the shares, lost $26 on that first in-the-money covered call, and then I gained $20 on the second out-of-the-money covered call. So overall, there was a profit, but that's why that loss was there, because I guess I had a little FOMO and I wanted to capture the gains on that stock. All right, the next thing I did, we'll jump down here to this leaps row right here. So here on the first, I bought a 33 strike price call. Okay, so this is the 33 call. This is a leap option. Now, a leap option, I haven't covered on this channel, but I plan to. And basically, this is a deep in the money call option that is dated for a long expiration. So in this case, it's not too long. It's only 3 months out. So I bought the $33 call with an expiration of February 18th of 2022. I bought one of them and I spent $945 doing it. Now, when you have that leap option, that can act as a lot of synthetic shares, and you can sell a call against that leap option, so against that call. So you can sell a call while you're buying this call. So basically, it's a debit spread, a long-dated debit spread. You're actually having to pay to enter this trade. It's also referred to as a poor man's covered call. And I wanted to try something out. It didn't turn out the way that I expected it to. I guess it turned out a little bit better. So let me explain what I did here. I bought a 33 strike call for $945. Then I sold a call against it, a shorter dated covered call at the $40 strike price. And again, Lucid just kept going up. So I exited that the same day and I lost $56. I sold a higher strike price, 42 call. I also exited it the same day for a $20 gain. All right, so right now I'm down $36 on this leap option. But because Lucid kept going up, I simply sold this call option outright. Bought it for $9.45, sold it at $12. I gained $255 on this Lucid play. So this is referred to as a poor man's covered call. And again, I was expecting something different, and it didn't play out as well as I wanted it to. So what I'm going to do is I'm going to try this again. I'm testing something out, and I'll have to report back on that later. But overall, Lucid had a lot of gains, even though I had these 2 losses. And then finally, I just sold a cash secured put, $39 strike price, sold 3 of them, and you can see at 91% max profit, I exited, and for a total of $864 in the month of November for Lucid. All right, Mara, you've already seen most of it, but these are all cash secured puts on Mara. Again, all 70% chance of probability, and you can see when I entered, when I exited, how much I made, for a total of $656 in November for Mara. All right, MVIS. I entered a cash secured put back in October, was assigned early November, $850. I sold a covered call at the $850 strike price. It expired in the money, so that was assigned to me. Therefore, my shares were called away. I had to sell my shares at $850. I bought them at $850, so no gain on the actual share sale, but I gained $28 in premium. So $28 for the month with MVIS. All right, NNDM, here's my big loss. NNDM, back in January, I bought a LEAP option that expired in December of the same year. So this was a 12-month dated option. And so again, a deep in the money call option, and I was going to sell covered calls against it. So this is when I was first playing with the poor man's covered call. It didn't work out too well. As you can see, I was able to sell covered calls against it, and I made some money, but this call option just decreased in value tremendously because the stock price decreased in value quite a bit over the past year. So I bought it for $950, and I had to close it out for $9. And so I lost $941 on this particular trade. So doing this, really had me thinking about 2 things. One, I don't like to sell options on stocks that only have monthly expirations, and that's what this NNDM had at the time, so I'm going to stay away from those. And also, it sort of turned me off to the poor man's covered call, and obviously you can see why. I was losing pretty heavily on it, but I wanted to try it once again. That's why I did the Lucid poor man's covered call. It turned out well, but it didn't turn out as I expected. And so again, I'm going to do some more testing and report back on that. All right, so $932 loss on this stock. All right, Riot, this was a big winner for me. I already have a handful of shares with Riot, so I was able to just sell covered calls a lot for this month, but I'm also bullish on the stock and on cryptocurrency in general, so that's why I was trading this particular stock a lot, because it had great volatility. So I bought shares, I sold covered calls against shares I owned. Some of my shares were called away, so I got some capital gains on those. Sold more covered calls, cash secured puts, and you can see, all green for this particular ticker. So a grand total of $2,604. Now, once again, all of the covered calls, the strike prices I'm choosing are at or above the cost basis of the shares that I'm holding. And secondly, I'm trying to sell those covered calls on green days when the stock is trending upward. All right. For the cash secured puts, all of these plays down here, the strike prices are at a delta of -0.3, or approximately 70% chance of expiring out of the money. And I try to sell those cash secured puts on red days, or when the stock is trending downward. So that's how I'm entering. When I'm exiting, you can see it's anywhere from about 50 to 90% profit. That's what I'm trying to do. Here, this is just a little bit less than 50% profit, and some of them, obviously these expired in the money and I was assigned. That's the basic rule. So it's pretty simple for me. I know when I'm entering, I know when I'm exiting. Right, so Riot did really well. And then the last one would be Workhorse. Didn't do too much here. So I bought some Workhorse shares, $6.92, and I just sold them at $7. And I guess I just wanted to get rid of those shares for whatever reason. $8 profit, and then I covered calls of shares that I already own. And again, 4 contracts each, and then I gained this. So I'm exiting around 90% of my max profit. So $164 in total. So overall, with my November trades, 56.33. I've got a couple of losses. That includes this really big loss from earlier this year. You can see how I use probability to enter my trades. 70% chance of profit. Yes, I might lose some, but the majority of trades I'm winning, and then I'm exiting about 90% profit so that I don't get assigned. So I can use my cash to enter another trade for the following week. I'm mainly selling weeklies. Every once in a while, I'll go out to 14 days, but usually anywhere from 3 to 7, 3 to 10 days is when I'm selling these calls and selling these puts. So I'm not sure if that cleared up anything for anybody, but I just wanted to put this out there, as some people were asking what I did in November, what exactly I did in November. So if you found this helpful, give it a thumbs up. If you have any questions about the wheel strategy, selling options in general, go ahead and leave a comment down below, or you can ask me on Twitter at Trading5Talents. If you want a copy of this trade log, there's a link down in the description as well. You can download your free copy as well as the cost basis calculator. Don't forget to subscribe and turn on the notifications if you want to keep up to date on how I'm using the wheel strategy for lifestyle trading to pay off my Tesla Model 3. And until next time, trade wisely and take care.